Hello students and good day to you all. Welcome to the Financial Academy. Today it is the 25th of December 2017. This is Monday obviously, and this is the analysis for the current market status in terms of the weekly movement. Now, we talked a lot about the dollar in the previous weeks, and we will analyze the dollar today as well. I will cover the euro in front of the Australian dollar, our expectation from this asset that occurred 2 weeks ago and further into last week as well. And at the end of this session, I will have additional analysis regarding the Bitcoin. We've received a lot of requests from our traders to cover the cryptocurrency outside of our course, and because of that we will give additional information to our traders as well regarding this specific currency. So let's move forward to our chart station, moving to the sidekicks, my trading station, and opening the chart over here. So the first thing that we will cover will be the dollar index. Let's go back to the dollar index to understand exactly what is our expectation based on this asset specifically. So looking at the daily chart, when it comes down to the dollar index, we said that we're expecting to receive a downtrend movement on behalf of the dollar index. And indeed, on the weekly chart, we can see that the market went a bit lower. But generally, we can say that the market is just fluctuating on a sideways movement. Now, I was expecting a larger movement of a downtrend from this area over here. We've analyzed that several weeks ago, and I showed you the potential of a downtrend movement, and it's still my expectation. But last week I said that I'm stepping down from this specific potential regarding the dollar because we see that the dollar is not moving anywhere. And I've made some connection between the inconsistent movement on behalf of the dollar, not for an uptrend, a stronger dollar, or a downtrend, a weaker dollar, and the flow of cash, of movement toward the cryptocurrency investment. We see that the correlation in the market does not fit our general idea, and we understand that it is because the cryptocurrency has become the safe haven of traders. Now, I don't know if you've got any idea regarding the US market right now, but we can see that it's climbing up very nicely, breaking new records, and all of a sudden dropping down significantly. So there's a lot of confusion in that market as well. And I'm talking about a long period when this market only gained additional strength approximately since Trump became the president of the United States, and a bit earlier than that as well. So generally we can say that the US market has reflected such strength, and all of a sudden to receive such a contradiction when we see money getting out of the market, not adding to the strength and confidence as we were expecting it to, we understand that there are several ideas in the market that might not fit our general analysis. So it's important for us to always keep our eyes open and understand that the market is indeed a living beast. And because of that, we need to reconsider our tools and to build new ones according to the new information that we received from the market. So based on the dollar index, we can say that generally right now our expectation is still to see the dollar weakening in the market, but generally doing that with very low amount of liquidity as confusion is ruling the market at the moment. Let's move forward and look at the euro in front of the US dollar, basically expressing the same idea. You can see that it's just the opposite. Okay, we saw the downtrend movement on the dollar index, and over here we can see an uptrend movement with the same structure, the same structure as we saw on the dollar index. Again, I've talked about a large uptrend movement. Right now we can see that it's fluctuating around these levels for the last 4 weeks, which is very frustrating. Still, I told you that our advice to our traders is to keep on trading with this asset until we will see a break below the entry point. Now, just to take you back to the entry point regarding this specific trade, we had this very nice downtrend movement, and we had this pullback lower, and I told you that below these levels I do expect you to close the chart, to close the trade. And as you can see, from this point and forward, the market climbed higher and higher, and I still expect it to climb further. Just not, we can't see that forming in the right or let's say, our expected strength as we were expecting to receive several weeks ago. So I would definitely advise our traders to rethink this position. You might find other potentials in the market and just put it aside. You're profitable with this specific trade, and you can use the entire market for your advantage, not only the dollar in front of the euro or the dollar specifically right now. Let's move forward to the euro in front of the Australian dollar. And we can see still that the market is just moving toward our prediction in a very, very nice formation. As I showed you, I was expecting the market to drop down significantly, and we see that the market is just moving toward that direction very, very nicely. But I'd like to add to that, and we will do that in a second. Let's first look at the daily chart. You can see that indeed from our prediction, the market has moved lower and lower and lower for the last several days. Still, we can see this weakness, and our expectation is to see additional weakness forming additional downtrend. Now, just to measure that, we can already see that the market went lower by almost 3%. 3% of the downtrend movement since I was announcing this expectation. Now, looking at the entry point and looking at the structure itself, let's look at the hourly chart. You can definitely see that we've got 5 waves of a downtrend movement. Let's mark them. So we've got a very nice downtrend, 1, 2, 3, 4, and 5. Now that's a bit of a mistake because you can see that the 4th wave is penetrating the structure of the 1st wave. So what we can see right now is an expectation for 2 formations. We might see this as a 1, 2 and a beginning of a 1, 2, 3, 4, 5. It depends on the additional information that we'll receive, or we can see this as an overlapping structure, and then our expectation is just to see a bounce between these levels. Let me just copy that, and then we expect to receive a downtrend movement toward that direction. And after that, our expectation is to see additional uptrend movement in 3 waves that will fulfill the uptrend structure, that it will be the 2nd wave. And only then we'll move lower. Now, it happens usually in the directional movement when we're breaking the general trend. So we had a very nice uptrend over here. At this point, the market is starting to change its perspective. So right now we've got a downtrend movement potential. We're looking at the inner structure. We've talked about the head and shoulders structure. We've analyzed that several times in the past. And right now, the market is just moving very nicely toward our prediction. So as I said, I'm expecting to receive additional weakness. We will close a specific measurement of the position around the 15.2 level. 1.52 level. That will be a logical pullback, and then we're expecting to get into a corrective pattern, and only then we will add additional positions or funds toward the additional downtrend expectation. And that completes the analysis for the euro in front of the Australian dollar. Let's move forward and look at the Bitcoin, which received a very, very large pullback. A lot of expectation and a lot of fear was expressed through the Bitcoin. Let's look at this chart as well. And this chart is really amazing. I mean, look at that. The Bitcoin climbed from, I'm talking about September this year, okay? I'm talking about September, that was $3,000 for 1 Bitcoin. And since then, the market just climbed up from $3,000 toward the almost $20,000 at the mid of this month, this December, 17th of December. We had an almost $20,000 price tag on this Bitcoin. And since then, the market just dropped down significantly. Now, last week, we've received a major collapse on price action. The market was fluctuating around the 1700 level, and from that point forward, we've received a pullback, a significant downtrend, and the price really plunged toward the 1100 level, which is an enormous downtrend movement. Now, let's talk about the structure in terms of the potential when it comes down to the edit wave analysis. We definitely see a 5-wave movement on this chart specifically. If we're going to analyze that, you can see an inner structure of 5 waves over here. We've got the 1, the 2, the 3, the 4, and the 5. That is the third wave inside this entire cycle. And we've got the larger 5-wave movement. That is the larger wave. That 1, 2, all this is 3, 4, and 5. Just change the color to blue, and you'll see the larger structure. So we've got the inner third wave over here, and we've got the larger uptrend movement. And obviously we have several waves in the past as well. 1, 2, 3, 4, 5. That was the first wave and the downtrend movement. And right now what we can see is a corrective pattern that corrects this entire structure. Now let's talk about the Elliott wave just for 1 second. And the Elliott wave describes any growth or shrinking process of any company, any process of growth when it comes down to wealth, investment potential, and it's expressing both the potential, the greed, and fear when traders see some sort of information that doesn't fit their expectation. Now think about that. What happened over here? The Bitcoin cleaned all the unconfident traders, unconfident investors that lost a lot of money in this specific movement. Now, as you can see over here, we formed a very, very strong downtrend movement, an instant downtrend movement that is a middle of a corrective pattern. We can see that this movement is as an A wave. This structure is a B wave. I'm expecting to receive additional uptrend movement toward the 16 level, and my expectation is to see the market dropping down toward the $8,000, a very, very low rate when it comes down to seeing the Bitcoin at 2000 just last week. It's amazing to see the movement that occurs on this specific asset, but it's just because we see so much capital being invested in the Bitcoin, and on the contrary, we see the value changing. It's just amazing to see how this currency is really fighting for survival. And no question about that, I do think that it's here to stay, and it's here to develop a new method of looking at the entire economy. But right now we can see that the Elliott wave is forming a very, very clean structure, and I can tell you that the Elliott wave is working very nicely when it comes down to analyzing the Bitcoin. Right now I will make an assessment regarding the pullback of this specific structure. My expectation is to see the market dropping down toward this 78 level, which will complete this cycle. Now we can receive additional accurate prediction for this specific structure, and again it's all based on an average movement. So we're expecting the B wave to climb toward this direction and the C wave to complete its structure around these levels. So as I said, around the $8,000, that is a good place to catch the Bitcoin for additional uptrend. And this is only the beginning. That's the way that I'm looking at it as at the moment. I'm practically making the connection between the Bitcoin and the gold. The value of the gold years ago was approximately $3, and since then it climbed up to 1900. And as you can see, indeed, we're talking about approximately the same idea, being the safe haven of traders when they see some sort of formation that doesn't fit their expectation outside this cryptocurrency world. Then traders just pull their investment and placing that on cryptocurrencies. Now, the Bitcoin has a special meaning when it comes down to cryptocurrencies because it's being valued with Bitcoins. And because of that, Bitcoins is possessing this very, very essential position. Now, it doesn't mean that all the other currencies are weakening when the Bitcoin is weakening. On the contrary, because other currencies are being valued with Bitcoin, then other currencies are gaining strength as the value of the Bitcoin is dropping down. So we can see the major amount of cryptocurrencies are gaining strength at the moment, and I'm not talking about 20%. I'm talking about way beyond that. We say 800% on several assets, so a bit lower than that. But generally, we can see major changes occurring on the entire cryptocurrency world when it comes down to major changes on behalf of the Bitcoin itself. Now, cryptocurrencies has a lot to do with buying, trading between traders, and mining, which is another way to obtain a specific amount of currencies, and it has a lot to do with the energy invested in order for the miners to receive this specific amount to their possession. So in this case, we've got a lot of interference, not like the common financial market in the forex market or stock markets, but we can definitely say that there are two areas that dictates the potential of a price when it comes down to currencies. Now we know that the Bitcoin is losing its strength when it comes down to mining, but still is a central asset when it comes down to exchanging your dollars to bitcoins and then moving that forward to other currencies. And because of that, it's reacting as a center, just as the dollar in the financial market. And it's beautiful to see. I'd like to wish you all the best with your trades. Have a pleasant week, and bye bye.